Thank you for joining our August self-directed and solo 401k live Q&A session. We look forward to answering all the questions today. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today, Dmitry Fomichenko is joining me, and he'll be answering all of the questions. Dmitry is the founder and president of Sense Financial Services. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. And Dmitry holds a designation of Certified IRA Services Professional from the American Bankers Association. Over the years, he's taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Thank you for joining us today, Dmitry, and answering the questions.
Sure, Natalie. It's great to be here with you. Looking forward to it.
All right, we will go ahead and jump in. First two questions are a bit similar. They are from Zach and Joseph. They're asking, what are good practices for long-term record keeping, and what types of challenges have been made against solo 401k accounts by the IRS or state tax agencies? Is there a recommended format for general bookkeeping in the event the trust is audited?
I can't really comment much about the challenges by the IRS and local state tax agencies. I don't have that kind of statistics. We only had just a handful of cases when IRS questioned our clients. They were nothing serious. They are probably just an error that was discovered. But as far as the practices for bookkeeping, you do whatever system that you're comfortable with. There is no general rule for the bookkeeping for your solo 401k. How do you normally keep books for your personal investments and for your business? Again, if it's solo 401k, you must have a system in place for your business. So use the same system that you already been using, that you're familiar with, that you're comfortable with. Just you need to create a separate set of books for your solo 401k plan. As far as the record keeping, we're living in the times when it's super easy to do that. You can store all of your documents and records electronically, online, in clouds. You don't have to be worrying about your computer getting crashed. So don't store them on your computer hard drive, because there is a possible risk. But if you store it online, you can access it from anywhere, and they can be stored there forever. It doesn't, just the PDF files don't take a lot of space, so you can store them forever. But use whatever system that you're comfortable with.
Okay, next question here is from Phil. I've not filled out Form 5500 EZ as I have been under 250K. I may be just over that point right now. I will not be able to complete it in time for this year. Do I just file next year showing approximately 260K in assets?
Well, Phil, it's not important actually what the total plan assets are right now, because the deadline just passed for the year 2024, and the important date was end of the plan year. For most clients, end of the plan year is December 31st. So if you were under $250,000 in total plan assets as of December 31st, you've got nothing to be concerned about, because you were not required to file. Now, if you are referring to now, when you say now, if you're referring to the end of the plan year, if you were over that threshold and you did not file, then yes, you need to be concerned about this, because you were required to file, and penalties for failing to file can be pretty severe, up to $150,000. So you do want to file it, and make sure you have reminders for yourself. We always send reminders for our clients. We send typically email reminder when the form first becomes available, typically in middle of the Q1. And then another reminder before the actual deadline comes up, which is, again, assuming that your plan year ends December 31st, that deadline will be end of the 7th month following the end of the plan year, which is July 31st. Now, if your plan year is different than the calendar year, then you have to adjust accordingly. But again, we are on your side as a client. We want to make sure that you're not missing that deadline, but ultimately you're responsible for this, so you want to have your own reminders, and it's pretty easy to complete this form, so be sure to do that.
Okay, question from Sam. If a non-recourse loan is used in solo 401k, is a lien recorded on the property? Does my solo 401k own 100% of the property, even though a non-recourse loan was used for the purchase?
A good question, Sam. If you decide to buy an investment property in your solo 401k plan and you use a non-recourse loan to acquire it, let's say you put 50% down and then you get a loan for 50% remaining of the purchase of the property, then yes, the lender will record the lien. The non-recourse, the definition of non-recourse is that the lender has no recourse against you, against the 401k. The only recourse they have is the property, because the property is the only security for the loan. So obviously there will be a lien recorded, just like any other mortgage that you for a personal property. And yes, assuming that your 401k is the only buyer, then yes, all 401k will be 100% owner of the property. The bank or the lender, they don't own a property jointly with you, their lender. The property is the security for the loan, but yes, you are, or your 401k in this case will be 100% owner of the property.
Okay, next question is from Dion. How can small business owners take advantage of a solo 401k the most?
Yeah, that's a very broad question. I'm going to try to answer that shortly here in the Q&A. But Dion, if you're not familiar with the solo 401k, just trying to learn about this, then you probably can join one of our education webinars on the topic where we can dive deep into all of the advantages of the solo 401k, or you can watch the recording. You can go on our website, you can go at the resources tab and then click on past webinars and just find a webinar on the topic of the solo 401k. But the major advantage, if I could summarize, the major advantage of the solo 401k for small business owners is its ability to make large contributions, which equates to being a great tax shelter. Solo 401k allows you to contribute nearly $70,000 a year per participant. So if you're in a business for yourself, and if your spouse is also involved in the business, then you can double that potentially. You can shelter well over $100,000 of your business income from taxes as husband and wife, and that can significantly minimize your tax liability. So instead of paying to Uncle Sam, you can put those funds into your own solo 401k. So I will say that's the major advantage as a small business owner. Again, assuming you're doing well, you're making money, then you should be maximizing your contributions. There are other benefits that solo 401k offers. Certainly review those resources that I mentioned, but as a small business owner, that probably will be the biggest one.
Okay, a question from Mary. When one reaches the age of 73 and the RMD kicks in, how is this handled in a self-directed IRA?
Well, Mary, good question. If you reach the RMD age, which stands for required minimum distribution, and if you have an IRA or a 401k, you are required to take X amount of dollars every year. Now that amount is depending on your balance in your IRA, or actually if it's an IRA, all of the IRAs combined can be used. So if you have a self-directed traditional IRA and then you have other self-directed, if you have other traditional IRAs, they can be combined and RMD can be taken just from one account. But the key here, if you have a self-directed IRA and you invest in alternative assets, is to plan for it. Because let's say you use your self-directed IRA to purchase a rental property and you used up all the cash, you have mortgage on it, you have rent coming in, but it pays the mortgage, and so there is not a lot of cash flow, and you're approaching age of 73 and you have to take a required means distribution. You can just pull a garage door out of your IRA, obviously. So you certainly need to plan for it, and that means plan for it ahead of time, that is. So thinking about what kind of assets you're buying. Ideally, you want to acquire enough assets in your IRA that produce enough passive income that will satisfy the RMD plus more. So this way you don't have to worry about liquidating assets. But again, you got to start thinking about this early on, in your 50s, 60s. Certainly when you reach 73, that's a little bit too late to plan for it. You're going to have to be reacting to it. But if you plan ahead, and you need to kind of crunch the numbers so that you can estimate how much in RMD you'll have to take out, then you should be in good shape. But if you happen to be at age of 73 and you don't have enough liquidity to take RMD, to satisfy the RMD, well, you could potentially take the property out as a in-kind distribution. You can take the whole property out or potentially a portion of it. So that's also a strategy that might work, although it can become complicated if you're now taking a portion of the property, let's say 25%, that is owned personally by you and 75% by the IRA. So there are potential complications, but it is possible. So that's why you want to plan of it ahead of time.
Okay, a question from Elizabeth. I've had a solo 401k for a few years now. It was funded from an old 401k. I haven't been able to contribute any more money because I haven't been able to generate income yet. Can I still keep the solo 401k account?
Yeah, that's a good question, Elizabeth. So, and we are talking about potentially the compliance and eligibility questions, because solo 401k is established for those people who are either self-employed or own a business without full-time employees that generates earned income. So if you're not generating any income, then are you self-employed? Are you in business? So that is really the question. And if you're not, if you're no longer eligible, if you're not in business for yourself, if you're not self-employed, and I understand if it's just a couple of years, yeah, maybe when you're starting a business, you might not have income, but if it's been several years and you're not able to generate any self-employed income, then you might not be no longer self-employed. And you may need to consider perhaps a switch into a self-directed IRA if you have alternative assets. But Elizabeth, the best thing will be to reach out to our office and schedule a one-on-one consultation. I'll be happy to speak with you because I'd like to learn a little bit more details to give you specific advice on your situation.
Okay, a question from Melody. If you created a solo 401k years before setting up and the S-Corp for the same business as a realtor, can you still contribute to the solo 401k with an employer match?
Let me see if I get this. If you create solo 401k years before setting up an S-Corp. Okay, so I think what you're trying to say, Melanie, is that you established a solo 401k and then later on you incorporated, you started an S corp, which is fine. That's actually quite common. Many of our clients are realtors, just like you are. And if you're starting out, you're probably not going to start with the S corp. So you're going to start as a sole proprietor. And if you did started solo 401k as a sole proprietor, then later you incorporated, now you have an S corp, the plan can be amended. So that's what you need. You need amendment to the plan, and we can change the sponsor of the 401k from being a sole proprietor to now a new sponsor will be your S corp. So it doesn't affect any investments of the plan, but the sponsor will be changed. So that's pretty common. Reach out to our office and our team will help you.
Okay, question from Chuck. What is the account balance in an IRA that requires tax filing with the IRS?
Chuck, if you have an IRA, you might be confusing this with the solo 401k, because solo 401k does have the minimum threshold, and that is $250,000 in plan assets, in which the plan administrator will be required to submit Form 5500 EZ to the IRS. That's the reporting that you're referring to. With an IRA, that's different. If you have an IRA, it's actually, you don't report anything to the IRS. It's the IRA custodian that is required to report, and regardless of the balance, it needs to be reported every year. So that's the difference. But again, if it's an IRA, and if you're a client of Sense Financial, then you do have a checkbook IRA. You probably have IRA that owns an LLC or perhaps a trust, and that's how you get the checkbook control of your IRA assets. So in this case, you are required to provide the valuation of the asset, which is LLC or a trust, to your IRA custodian, because IRA custodian, in order to report the value of your IRA, they need your help. They need to tell them what's the value of that LLC, special purpose LLC that your IRA owns. And obviously that LLC consists, or the value of the LLC consists of all of the assets that are inside of that. So you have to provide that valuation to your custodian every December. It's very important that you do that. Custodian will reach out to you. We will help you as well. We do send reminders in December for that valuation, but that valuation needs to be submitted directly to your IRA custodian. So again, we're just helping you with the reminder, but you're responsible for that. If you don't, you may incur penalties, and your IRA custodian can actually drop you as a client. So, and that means that your IRA will be considered distributed. So don't let that happen to you. Again, take a mental note, and more importantly, make a reminder on your calendar to yourself to provide that valuation. Again, if you missed an email from your custodian or from us, then you will be reminded based on your own system.
Okay, next question is from Troy. Troy did ask a very personal question, so since this is a general Q&A, if you are on this call, Troy, we do ask you to contact us to schedule a personal meeting with Dimitri. But moving on to the next questions, we have some questions that are, a few questions that are related. They are from Anthony, T, and Joseph. They would like to understand more about Form 5500 EZ, and Joseph is also asking, how do I fill out Form 5500 EZ under Part 3 contributions for 5500 EZ due on July 31st? If a deposit was made early 2024, that was designated for the year 2023 on my employer corporate tax return.
Well, if you're a client of Sense Financial, you received a reminder again from us. Like I said, this is this event, filing Form 5500 is important. Penalties are pretty severe, so you don't want to miss that. We don't want you to miss that. That's why we send multiple reminders, making sure that you're not forgetting this, that you're not overlooking this responsibility. And we do have detailed guidance for you as a client. You can access that on the client portal, and you can view those instructions. We tell you step by step, line by line, literally how to complete this form. So it's pretty straightforward. Again, as if you're a client, we can also help review the form for you. So we typically say, hey, go ahead, complete the form, follow the instructions, do it to the best of your ability, and then you can send the form to us for review. And typically, if it's the first time, we'll catch a couple of errors there. But if you've done it once or twice, I think you'll become an expert really quickly there. So as far as the contributions, yeah, if you made the contribution in the following year, right, for the, let's say you made a contribution in 2025 for the year 2024, well, that contribution has to be reported on the 2024 form, because the question is there, if I remember correctly, it says or asking about the contributions received or receivable. So let's say you're completing this form in February, right? And you haven't even made the contribution yet. But if you, because you have to elect to make a contribution by December 31st. So if you made that election but you haven't contributed yet, in 2024, you're doing that. In 2025, you still have to report it.
And a follow-up question from Joseph that I missed. He asked, who represents the 401k trust if there is an audit?
Or the plan administrator, which will be the employer, the sponsor of the 401k plan. So typically it's the business owner.
Okay, a question from T. Does the rule of 55 apply to solo 401ks? Can I stop working in the company the year I turn 55 and be able to access the full solo 401k amount, including amounts that I rolled over from another IRA?
Yeah, this is a little bit tricky question, T, because solo 401k designed for those people who are self-employed or own a business. And let's see, do you provide these details here? Well, can I stop working for my company? So if now if you have a company, let's say if you have a business, S corp, and you turn 55, well, if you close the company, right? If you stop working for the company, you close the company, then you no longer will be eligible for solo 401k. So we need to look a little bit deeper into this. Again, I will suggest reaching out and scheduling one-on-one. One potential workaround is that if you wish to access your funds, you're turning 55, your spouse is younger, then you can make your spouse be the employee and the owner of the corporation potentially, and then you stop working, you can access your portion. So that's a possibility, but this is just general. So you probably need to bring your CPA into conversation and talk to us more specifically.
Okay, question from Laura. Please cover how I can find brokerage houses that will let me invest my Roth funds and manage them myself. Most seem to want to be my custodian, and that is not what I want.
Yeah, so Laura, if you have a, you might be referring to Roth IRA, because you didn't specify here, you said Roth, and obviously we have clients with the Roth IRA and Roth 401ks. It depends on whether it's an IRA or a 401k. But if it's a 401k, then you can simply open a brokerage account. Again, head over to the client portal and review the instructions there. We have about a dozen brokerages that you can open the brokerage account at the brokerage firm. If it's an IRA, that's going to be a little bit different. But again, maybe you can reach out to us and we can learn more specific things about your situation and guide you.
Okay, we have a few questions from Lisa. I will try to combine couple of them. She's asking, can I use my solo 401k to invest in another company? And can I use my solo 401k to pay off another investment?
Lisa, you certainly can use your solo 401k to invest in virtually anything. Again, remember the prohibited transaction rules, which state that you cannot invest your IRA and 401k funds into collectibles, life insurance, and then any transaction with disqualified person. So if another company that you wish to invest in, also important is how you're going to invest in. Are you going to be lending to this company, or are you going to be taking ownership of that company if it's like a C Corp? So that's also important. And if it's an LLC, for example, like a partnership, and your 401k owns a portion of the company, then there will be a complications of UBIT, which stands for Unrelated Business Income Tax. You cannot be involved in that business in any capacity. Your immediate family members cannot be involved, but there'll be potential tax consequences. Now, if it's a C Corp and you just, your 401k is a shareholder on some shares of the C Corp, that should be fine. No issues there. But as far as using your solo 401k to pay off another investment, assuming you own, you cannot do that. You cannot commingle your personal investments, finances with your solo 401k. Everything must be separated, so you cannot commingle the two.
Okay, next couple of questions from Lisa. How do loans work, and is there a limit on the amount I could lend on investments?
Yeah, I think they're unrelated questions, and Lisa, I'm going to have to try to read between the lines here, if you will. When you ask how the loans work, if you're referring to the participant loan from the solo 401k plan, then just a high overview here. You can take up to $50,000 or 50% of the balance, whichever is less. Typically, it's a 5-year loan. Terms are set. It's an amortized loan at prime plus 1%. And again, you can head over to the client portal and get all the information you need there. We have loan application there and detailed guidance on how to do it. As far as if you're trying to make an investment and you trying to lend somebody, let's say this is very common with the self-directed retirement accounts, private lending. Many of our clients do it. I've done it myself many times. So if you're lending to someone as an investment, there is no limit how much you can lend. So you can lend the whole amount of your solo 401k. The limit, the 50% balance or 50,000, that's a personal loan that you take from the 401k. So don't mix the two.
Okay, last question here from Lisa. What would be the best options for me to use my solo 401k account to help grow my other investments?
No options, Lisa. There is no options for you to use your solo 401k to help grow your personal investments, if that's what you're referring to. You cannot commingle your 401k with the personal funds, so you got to keep them completely separate.
Okay, a question from James. What are the requirements for taking a personal loan from the account? At what age am I required to draw down funds, and what is the percentage amount that is required?
Yeah, I think that I just covered that in the participant loan, so I'm not going to go over that. And then I think second part of the question, what age am I required to draw funds? Well, that's a question of the R&D, required minimum distribution. I believe currently that's age of 73, and the amount depends on the total balance in your 401k and also your age. And unlike with an IRA, where If you have multiple IRAs, you can combine them together to satisfy the RMD. You can just pull the RMD from one IRA and satisfy RMD requirements for the entirety of your IRAs. If you have a solo 401k, then you have to calculate RMD just for that 401k plan. So you can't take distributions from an IRA and satisfy RMD requirements for the solo 401k. So you have to do it for the 401k plan.
Okay, question from Johnny. How are business loans treated for a solo 401k? Is the entire amount of the loan included in the 12/31/25 401k account balance used to calculate RMD?
Johnny, I'd love to answer your question, but I'm a little bit lost. I'm not sure what you mean by business loan and how is it related to the solo 401k. Typically, business loan, if you own a business and you take a business loan to help you grow your business, what does it have to do with the solo 401k? So I'm a little bit lost here. I'm not following your question. So if you please expand. Or reach out to our office, happy to help.
Okay, a question from Octave. Can I flip houses in my Roth IRA? If not, how long do I have to hold the house before I sell it? Should my rent house that is held in my Roth IRA be exempt from state taxes or Airbnb state lodging taxes?
Yeah, there are multiple questions here. So first, let's talk about flipping. If you start flipping properties inside of your retirement account, flipping is generally considered an active business. And if you run an active business inside of a retirement account, the gains and income and profits from the active business will be subject to unrelated business income tax, regardless whether it's pre-tax or Roth. So in your case, it's Roth. If you run in a flipping business, UBIT will apply. Now, if you're gonna do kind of a long-term flip, you're gonna buy the property, you're gonna fix that up over a period of few months, let's say, and then you rent it out for a year or two. Well, that's a long-term flip. Then it won't be considered a flip because typically flip is under a year. So I think you can avoid the UBIT implications in that case. But talk to your CPA about this. And then if you own a rental property in your Roth IRA, will it be exempt from state taxes? No, it will not be exempt from the property taxes, if that's what you're referring to. So Airbnb, state taxes. Now, state income tax, yeah, that you will not be required to pay state income taxes on the rent that you receive. But if there is any local taxes, like property taxes, for example, right? So regardless whether you own the property personally in your traditional IRA or a Roth IRA, you're going to have to pay the property taxes. If there is a local city that assesses taxes, certain taxes on rental, then you'd be required to pay that, whether it's property owned personally by you, traditional IRA or Roth IRA. So not the property taxes, but income taxes, yes.
Okay, question from John. When I retire and close my business, can I continue to operate my solo 401k?
Yeah, it's a similar question to the one asked previously, but John, if you close the business, then there is no more sponsor of the 401k plan. So technically, that solo 401k will have to be terminated and you'll have to roll that over to an IRA. So if you're able to maintain some degree of self-employment activity, then you could continue to keep the 401k open. But if you shut down the business, there is no more activity, the plan will need to be terminated.
Okay, this question is from David. I only have $28K in my solo 401k and have had no activity in the account for several years. Do I really need a third-party administrator for such a small amount with no activity?
David, I'm assuming you're a client, and this is not just a hypothetical question, but if you have a self-directed solo 401k plan, there is no third-party administrator. You are the administrator of the plan. So again, when the solo 401k plan is established, the business owner or the business entity becomes the administrator, and you control the plan assets. You also become the trustee of the solo 401k trust. Our role, the Sense Financial's role in this, is that we are document sponsors. So we provide you with the plan documents. So that's what makes your plan being legitimate with the IRS. But we are not the third-party administrator. Now, if you want to keep your 401k alive, you need someone to provide you with the documents, do the annual sponsor reporting, and do the compliance, because those documents need to be changed from time to time to be in compliance with the IRS. But again, we are not a third-party administrator. So I think the bigger question here is you have a small balance, you had it for a few years, looks like you haven't made any contributions. So what is it invested in? Is it just in cash? Because obviously if it's just in cash and you're not doing anything, it doesn't make sense for you to keep it. You should terminate the plan if you're not really using it, if you're not using the benefits of the solo 401k plan. But it really depends on some of your other factors there. But like I answered in the previous question that was asked, if you're self-employed, you should be maximizing the benefits of the solo 401k. But feel free to contact us, schedule time. I'll be happy to speak with you, dig a little bit deeper into your situation, and we'll go from there.
Okay, a question from Micah. In the event I need to close down my sponsor LLC, but all the 401k money is already invested in a real estate syndication, what do I do?
A similar question again to the one previously asked. If your business is no longer there, then plan needs to be terminated. So you potentially can have another business. Again, let's say you were in business, you had an LLC, you were doing something, you were, say, flipping properties, right? You had LLC for that. If you stop doing that, but if you want to keep your solo 401k, it makes sense to keep it active because of its benefits. You don't need a custodian, you get checkbook control, the cost to maintain it is very nominal. Switching to an IRA can be a lot of headache, and you'll be downgraded. So if you want to keep the solo 401k alive, you can do something. Hey, start driving for Uber once a month, right? Maybe half Saturday. So you're going to create legitimate self-employment activity. There's going to be some income coming in. You can even continue to contribute to solo 401k, get some tax benefits. But the bottom line is that the 401k is employer sponsor plan, and it needs to have a sponsor. If there's no more sponsor, plan will be abandoned and will need to be terminated.
Question from Bill. For Roth 401k, do disqualified person and prohibited transaction rules apply?
Yes, Bill. The prohibited transaction rules and disqualified person rules apply to all retirement accounts.
Okay, question from Jack. The company for which my 401k is set up has not had income for 4 years. Are there problems with not contributing? And is there something else I should do with the 401k to keep out of trouble?
Yes, Jack, if your company didn't have any income, then is it a company? Is this a legitimate business? Because if the business is in business to make money, to make profit. So if you haven't had any profit in the last 4 years, then the legitimacy of that business and therefore solo 401k is in question. So reach out to us. Let's talk about more details and make sure that you are in compliance.
Okay, a question from Harold. He'd like more information on setting up a solo 401k while having an employer-sponsored 401k and the minimum needed to set up an account?
Harold, if you have employer-sponsored 401k, that has nothing to do with your ability to establish solo 401k. The only requirement to qualify for a solo 401k, you must have legitimate self-employment activity or business that generates earned income and have no employees working for you. And if you meet that requirement, then you're eligible. So you can have full-time employment with the 401k offered by your company. And then if you do something on the side, you flip one or two properties a year, again, you driving for Uber maybe, or something else. If you have some legitimate self-employment activity that you report on Schedule C, you will be eligible.
Okay, 3 separate questions here from Joseph. First question is it possible to roll over a solo 401k trust into another type of plan if the trust holds active stocks and venture capital investments that have not matured? Or must those investments be liquidated and converted to cash prior to the rollover?
Good question, Joseph. If your solo 401k plan needs to be terminated, let's say you're no longer eligible, as we discussed previously here, which few people had questions. So again, if you're not eligible for solo 401k and you have alternative assets, well, if it can be liquidated, that's easy, right? But in your case, it looks like it's a venture capital investment. Typically, those cannot be liquidated. They're illiquid investments. So what do? Well, you can open a self-directed IRA and you can do direct rollover in kind, so meaning that you're not moving the cash, you're moving the asset from a 401k to an IRA. That can be done.
Okay, second question from Joseph. Is there an audit risk if the employer and employee contribution amounts don't exactly match what was reported on the employer and employee corporate tax returns?
Yes, Joseph, there is a risk of audit when the contributions you report on the Form 5500 and they don't match what you reported on your personal or corporate tax return. So that needs to be corrected. You can amend your personal tax return if it's incorrect. If Form 5500 is incorrect, that can be amended too. So make sure to do that and make sure to report correct amounts, and do that as soon as you discover the error.
Final question from Joseph. Is it possible for the 401k to own a foreign corporation that owns foreign real estate? If so, how would this complicate reporting requirements?
Yes, as I mentioned earlier, solo 401k can own virtually anything. So yes, it can own real estate, it can own foreign corporation possibly that owns real estate. That is not my area of expertise. If you're trying to do that, or if you already have it, then it's already in the past, but the requirements will be still the same. You have to report total plan assets. The Form 5500 does not ask you to report a foreign corporation or a piece of real estate that it's owned. You need to report total plan assets. So you need to have the valuation of all of your assets in the 401k, add them all up and provide the total. That's all you have to do.
Okay, last question here from Edward, and we actually have a similar question in the chat. This question is, do you need to make yearly contributions? If so, what is the minimum?
I'm assuming, Edward, you're referring to the solo 401k again. If it's an IRA, there is no minimum that you have to contribute. It has maximum. So it's with the 401k, there is maximum contribution. There is not a minimum that you have to contribute every year. But if you establish a solo 401k plan, the primary reason you establish that is to provide benefits to the employees. And what those benefits are, well, it's the ability to contribute. So if you establish the plan and you never contribute, that can raise a red flag with the IRS. You don't want to do that. So you need to make substantial contributions periodically. You don't have to do it every year. You might be having a year where your profit is lower. You can skip that year. But in those years when you do make profit, we recommend contributing. So contribute every 2 to 3 years to your solo 401k plan, and that will keep you out of trouble.
Okay, moving on to the questions in the chat. First question here is from Chuck. I have a self-directed IRA where I've not made any contributions. It was a rollover from a previous solo 401k. How do I determine my allowed catch-up contribution amount if I want to make contributions going forward?
Okay, self-directed IRA was rolling from a previous catch-up contributions. Well, that's check with your CPA, and typically, again, if it's an IRA, I think the question is for an IRA, the catch-up contribution is $1,000. I think, yes, so if you're over 50, you can do additional 1,000 contribution, and regular contribution is $7,000 for a traditional IRA.
Okay, a question from Anthony. He is a Safeguard client. This is the first time he heard about 5500 EC. He says that Safeguard must have done it for him. How does he know if that was filed for him, and can he check if it has been compliant all these years?
Well, if you're not aware of that form, then it was not done for you. And Safeguard's role, or our role in this case, is to provide you with the plan documents. You are the plan administrator. That is your responsibility to complete the filing. And in fact, no third party can complete it for you. We can assist you in completing, but no one can do it for you because only you have access to the plan assets. And one of the main reporting that is part of the 5500 EZ is total plan assets. So if you haven't done it, no one else done it for you. So if you were required to do it, then you are a little bit in trouble. But the good news is that there is a way to correct that, and you can actually file a voluntary correction program, and you can file for the past years. We help few clients do that.
Okay, a question from Henry. I'm a current client and have a traditional and Roth IRA LLC with Solera Bank. I made an investment in a new hotel using my traditional IRA LLC in 2021. The strategy was to have the hotel get a new valuation before the construction begins. The new valuation is about 60% of the original investment, so my advisor is saying I should now do a Roth conversion to my Roth IRA LLC. What documentation would be required to do this conversion? Is there anything I would need to do with Solera Bank?
Yeah, so this is a question. I'm going to answer that, but it's you need more guidance than just asking question on the Q&A. Yes, you can do it if this is a great strategy. If your investment can be valued at 60% of its the actual value, that you can get a significant tax break on that. So yeah, you should do that, but reach out to our office so we can guide you how to do it correctly.
Okay, a question from Dre. How can I use my solo 401k to do angel investing?
Well, it will be the same way as if you were to do that personally. So with the exception is that the investor will be solo 401k trust. So you have to use, and whether you're doing angel investing or any other investing, the process is the same. Solo 401k trust is the investor, is the entity that makes the investment. So you must use its name. You're going to sign everything as a trustee, but the actual investor is the 401k trust. And you must use the tax ID number of the 401k when you complete the paperwork.
Okay, question from Gina about contributions. In 2025, max individual 401k contribution is $23,500. What is the cap on employer match? Is that dependent on what I pay myself?
Yeah, so the contribution for the employer are based, it's a percentage of the compensation that you receive. So if you're S corp and your tax salary is going to be 25% of your salary that your company pays yourself. If you're self-employed, it will be 20% of your net self-employment income minus half of the self-employment tax. There is an easy way to calculate that. You go to our website, click on the solo 401k, and then click on the contributions calculator. And we have a calculator there. You just punch in or type in your name, your age, and then your income. And then the calculator will do the rest for you.
Okay, a question from Kathy. Can I pull the RMD from other types of retirement accounts?
We talked about that, Kathy. If you are talking about an IRA, then yes, you can. You can take RMD from one IRA to satisfy the RMD for all IRAs that you might have. If you have a solo 401k, then the RMD must be calculated just for the 401k, for that 401k plan individually.
Okay, next question. Let me see here. Also from Kathy, can you roll your checkbook IRA into a traditional IRA?
Well, if your checkbook IRA is a traditional and you don't have any alternative assets in it, then yeah, you can move it to another traditional IRA. But if you have a checkbook IRA with alternative assets, then you won't be able to move it to a traditional IRA at Schwab or Fidelity, for example. They will not accept rollover for non-traditional assets. So then you have to wait until those assets are liquidated and you can move cash.
Okay, a question here from Elizabeth. My solo 401k is invested in crypto. Because I haven't had any income for several years, even though my S corp is still active, do I need to consider moving it to a self-directed IRA? If I do move it, do I have to sell the crypto first, or can it be done in kind? I'm a current client.
Yeah, I believe we answered this or similar question. Yes, if you're no longer eligible, now your S corp is still active. So if you're considering closing the S corp, then yes, you can close the S corp, you can close the 401k, and you can move it to an IRA. Now, if you want to move the assets, which is crypto or it might be anything else, it doesn't really matter. You can move those in kind from solo 401k to a self-directed IRA. But yeah, you will need a self-directed IRA because just a regular custodian will not accept alternative assets.
All right, looks like that was our last question. So we will go ahead and wrap up our Q&A session today. Thank you everyone for joining us. We had a great time answering all the questions. Our next Q&A session is on Monday, September 1st. So we do look forward to you joining us then and asking additional questions.